What a week it's been for Opendoor. After a wild rollercoaster of price action, we've started to see signs that the stock might be settling into a new zone of stability. The close yesterday was $2.29, and after the bell, we saw a modest aftermarket bounce. Nothing huge, but enough to suggest that investors may be testing out a potential support level in the $2.20 to $2.40 range. That's an encouraging sign, especially after the early day dip that saw the stock flirting with just above the $2 mark, only to recover later and close relatively stronger. Now, what does this tell us going into the pre-market session? Well, a couple of things. First, that there's some resilience in the stock, even when the broader momentum seems to be cooling off temporarily. We're not seeing the explosive runs we had a few days ago, but we're also not seeing a full capitulation either. That's worth noting. Secondly, and maybe more importantly, the volume has dropped off a little, which, to me, indicates that retail traders are holding their positions and waiting for a clear next move. It's less panic selling and more strategic watching. People are locking in, watching closely what happens ahead of the big shareholder vote on Monday. But here's the kicker, and this is what I want to emphasize. Based on all the signals we're getting from the board and the recent run-up in share price, I think the reverse stock split is becoming less and less likely to actually be enacted. The key wording in the proposal is that the board is seeking the authority to enact a reverse split if it deems necessary. And if necessary, is doing a lot of heavy lifting here. The recent surge in the share price, even with some pullbacks, has likely alleviated the compliance pressures that made the ROS proposal seem more urgent in the first place. The company is currently not in breach of any NASDAQ minimum bid rules, and there's no pressing reason to tamper with the current momentum, unless the board wants to risk alienating the very investors who helped drive this rally. That's why I continue to believe this vote is increasingly a non-event in terms of immediate stock impact. Unless something dramatic changes, the most likely outcome is that the board receives the power but chooses not to act on it. And honestly, that could be a best of both worlds scenario. They get flexibility, but we get continuity. And retail confidence remains intact. Now, let's not forget the bigger picture. While the short squeeze potential and meme interest have certainly powered a good chunk of this move, the long-term fundamentals are starting to look more and more relevant again. We're seeing early signs that the housing market might be entering a turnaround phase. Mortgage demand is ticking up in some regions, and several housing market forecasts are hinting at softening rates toward the end of the year or early next year. If that plays out, a company like Opendoor, which thrives on transaction volume and real estate liquidity, could be set up very nicely. And that's where I think the next major catalyst will come into play: August earnings. All eyes should be on that date. That's when we'll see whether this rally is just a short-term meme pop or the early stages of a larger recovery story. If they can deliver better than expected revenue or improved cost control, or even just offer a strong forward-looking guidance, it could really reignite the momentum and possibly push us past the psychological resistance levels we've been brushing up against, including that $5 barrier that we briefly tested not long ago. So heading into today's session, I'm remaining cautiously bullish. We're not seeing fireworks right now, but there are still embers burning, and it wouldn't take much to spark another leg upward. Watch the volume, watch the pre-market movement, and keep an eye on sentiment from Reddit and FinTwit communities. The chatter is still strong, the interest is still high, and the fundamentals are beginning to show signs of life. Let me know your thoughts in the comments. Are you holding, averaging down, or waiting for a better entry? Personally, I've made my bet and I'm riding this one into earnings. We could be in for a very interesting few weeks.